The 6 to 7 Figure Show, episode 95. Let's hit it.
Broadcasting from the Valley of the Sun outside Phoenix, Arizona. This is the 6 to 7 Figure Show. Tired of working so hard and having no time? Take your six-figure practice and turn it to a thriving seven-figure enterprise. And now, your host, author, speaker, mentor, and strategist, Frank Bria.
Hey everyone, welcome to the 6 to 7 Figure Show. I'm your host, Frank Bria. In today's episode, we're going to focus on investing. But first, a quick message from our sponsor. This episode of the 6 to 7 Figure Show is brought to you by High Ticket Program. What is standing between your six-figure practice and a seven-figure enterprise? Just 12 projects. That's all. Execute those projects and you're there. In the High Ticket Program Accelerator, we guide you through every step of growth and scale in a process we call LEAP. Imagine having a world-class project team guiding you and your team through every step of pain-free growth, all with the goal of becoming a seven-figure enterprise and moving away from painful, time-consuming business operations and client delivery. Get a taste of LEAP in your own business by downloading our free high-ticket program core offer Black Book. It contains more than 60 pages of standard operating procedures for how you run your business, including onboarding, customer service, graduation, financial management, and so forth. You can get that for free by going to the show's homepage at 6to7.show. That is 6to7.show for your free Black Book. I'm absolutely pleased to be introducing today's guest. Buck Joffrey, MD, is a surgeon turned entrepreneur and professional investor. He is the host of the Wealth Formula podcast, which focuses on investing outside of Wall Street for high-income individuals. The author of an international best-selling book on personal finance, Buck is also an active real estate professional with over $250 million of assets under management. Buck, welcome to the show.
Thanks for having me.
First question, what's the path from surgeon to investor? How does that work?
Attention deficit disorder. That's pretty much it. I'm at the end of the day, I think I started out along a very typical path for people who are good students and got good grades. And then, you get to college and people think, well, what can I do? And one of the choices is, well, maybe I want to be a doctor. And I think probably like at least 50% of people go to college, at least have that thought, maybe I'll be a doctor. And that's what I did. So I became a doctor, went into, was kind of a, type A personality, very aggressive, very, goal oriented. And, always picked the most challenging thing to try to do. Just started neurosurgery residency and, did all this stuff, finished residency. And, I think for me, in retrospect, hindsight is 2020, but it's one of those things where you end up doing stuff and you're like, oh, why did I do that again? It was a whole decade or two that I was involved with it, but, I never really truly had, I think, a really significant passion for what I was doing. And when I got out of training pretty quickly, I was fortunate. I read a Robert Kiyosaki book called The Cash Flow Quadrant, and a light bulb went off, and never really thought about being an entrepreneur, never thought about being an investor. And the rest is history. I mean, I literally, I felt like it really changed my life. And I discovered the inner entrepreneur in myself, and I was off to the races.
Yeah. Well, it's funny as you start with attention deficit disorder. I think a lot of us who are entrepreneurs could totally appreciate that.
Right.
But yet, getting all the way through medical school and residency, that takes a little bit of attention. I think for some of us, we would probably bounce a little faster than that.
Yeah.
That's a little dedication. So as you started to look at investing in, I know one of the things that you focus on now is kind of outside of the traditional sort of equities market perspective. Did you identify that there was something missing in the marketplace around this area that had you go there? Is this just more efficient for high income individuals? What drew you to this area of investing?
Well, I would say all of the above. I think I think for a group of entrepreneurs and business people, it is a very natural fit to be looking outside of the traditional markets, the stocks, bonds, mutual funds world, because, at the end of the day, investing is it should be part of what you do. It shouldn't be something that you hand off
Mm.
to somebody else to do, because most entrepreneurs are pretty sharp, and the more they can become personally educated in their in personal finance, the more control they can have. It's always kind of striking to me, because I do have a number of friends who are entrepreneurs, and some of them are ridiculously doing incredible things, right? But then, and they make gobs and gobs of money, and then they turn over and they just hand it all over to some guy who calls himself a financial advisor,
Yeah.
because somehow this guy is smarter than them. And to me, I didn't buy that. For me, one thing I'll tell you is, if you look around, and again, as an entrepreneur, as a person who thinks outside of the box, and you look at all the people out there who have made a lot of money, and most of them have made it from business, right?
Mhm.
But the truth of the matter is that when you look at people who've made a lot of money from their investments, I don't know anybody who became a millionaire because they invested in stocks, bonds, and mutual funds. On the contrary, I do know a lot of people who became millionaires because of their investments in real estate.
Yeah.
Right? Now, I'm not, only a real estate guy, but it's a big thing of what I do. So when you look at that, you wonder, well, gosh, well then why is it not part of the traditional investing paradigm for people? Like when you go to a financial advisor, so why is that not part of it? Well, then you realize there's this entire industry, right? And that you're not part of it. And just like you as a business person, there's another person in the financial industry who's making money off of you. And when you figure that out as an entrepreneur, hopefully, that should be like ding, 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 ding. There's opportunity here.
Yeah.
That's exactly what, in a nutshell, at a high level, that's what happened to me. I just wasn't, eager just to hand over my money to be, and I'd seen a lot of people do extremely well in real estate, and it was a no-brainer for me.
Yeah. It is interesting. There seems to be this louder and louder voice of moving away from alternative investments, where there's a discussion of, hey, let's just do index funds, stop trying to play with stuff, just park your money someplace. But it's fascinating that you bring this point up, which is that there doesn't seem to be a lot of big sort of wealth created out of that. That seems to be very much sort of a retirement asset kind of mentality. And it's interesting that it's almost a fear of kind of getting involved in other investment areas.
I think that's true. I mean, I was lucky, and I'm sorry, I keep adjusting this light.
That's fine.
It's as like I've got the sun coming from outside, so I'm totally confused. I have a problem living in California. All this sun, I don't know what to do with it. Sorry. The question was I'm sorry. What was the question?
What do you think is keeping people back? Is it fear primarily that's keeping people out?
So I always like to think of this again in the context of an entrepreneur. This should resonate, because what I really believe is that, in school, we are taught in a very old-fashioned system, right? It's basically a model of education that comes from the Industrial Revolution, and actually came from that period of time. And if you look at the way it's designed, you go to kindergarten, you get a plop, you get information. You move on to first grade, you get plopped, you get information. And so we're kind of like, we're in this mode where we get we get fed information our entire lives throughout school. And then one day there's no more school and there's no more information. And we're like, well, what am I supposed to do? How am I supposed to function now? Right? No one's telling me exactly what to do. So we're already primed for it.
Right.
And that's where, when there's no like curriculum, conventional wisdom usually takes place. Now, the problem with conventional wisdom is often wrong.
Right.
And, the earth is not flat. leeches can help a little bit, but antibiotics will help more. There's a lot of conventional wisdom that's right, and then there's also conventional wisdom that is influenced by special interests in medicine, for example. For half a century or more, we've believed that fat was the main culprit for cardiac disease, and now we know it was probably false information that was funded from the sugar industry. And there was a big, article back in the 40s and 50s that was from Harvard that was funded by the sugar industry to hide the negative effects of sugar. Bottom line is, what I'm trying to say is that conventional wisdom is not always right, and it's often influenced by special interests. Now, what is a bigger special interest than Wall Street and institutional, the banks, all this stuff, right? So conventional wisdom is to get out of, get a job, and then invest in a diversified portfolio of stocks, bonds, and mutual funds.
Yeah. In your 401k.
Yeah, in your 401k. And all of those things benefit, they significantly benefit the financial industry.
Right.
And so
there does seem to be a string of middlemen, stacked up.
Oh gosh,
right.
It's huge. It's not only middlemen too. I mean, it's just, we take sort of an unnatural faith in these kinds of markets. I'm just talking to people who are part of my investor group now. I always hear this story about how, this all makes so much sense, and I just can't understand why I feel kind of guilty about it. And I can't, and I just don't understand why my family keeps telling me I'm being irresponsible. So
Yeah.
a lot of it is psychological.
Sure.
It's so psychological. I mean, look at even the words we use to describe these types of investments. Real estate is a alternative investment. What does that make you think of when you say alternative? It's like
True.
purple hair or maybe a nose ring or something like. But the reality is that real estate and wealth from real estate and precious metals, all these things that are considered alternative investments, they've been around a lot longer than the financial markets.
Yeah.
And so that's my take. And and I think that it's a tough one to get past mentally, but when you do, and if you decide that it's right for you, it can be pretty liberating.
Well, as you kind of mentioned earlier, in any group of entrepreneurs, there ought to be some sympathy to, track the interests, track the money, try to figure out, who's actually benefiting from things. And that helps sort of inform the story. I want to on this point where you talked about the psychology, in an earlier, in one of your podcast episodes, you talked a lot about abundance and how this abundance mindset shifts things for you. I think one of the things that you had said, which caught my attention, was that the abundance people are a lot more fun to talk to.
Yeah, right.
Right. Does this play? Do you see there a correlation here between investing strategy and this mindset of abundance versus scarcity?
Yeah, I mean, I do. But I think it's I think it's sort of the nature of the investing process that becomes that influences that. So if you step back and you look and you go back to the whole stocks, bonds, and mutual funds paradigm, the game there is really, what is your number, right? I mean, you're going to get to a certain number, and then you're gonna live off of it until you die, right? By definition, there is a limit to resources, right? I mean, if you're playing by this old-fashioned 4% rule, the 4% rule being that you're going to save a certain amount, and after a period you can take 4% out and not outlive your money, then you're going to definitely you're approaching this very much from a situation where you're looking at resources as limited. I mean, you're literally trying to have your money outlive you. That's the goal, and that's depressing and scary. And of course, you're going to feel like you need to, scratch and dig and fight and save every penny and skip every latte, right? Um, Alternatively, I think the way that I approach, wealth creation, and I think our group in general has done so, is the idea of, accumulating assets, hard assets, like real estate or, stuff like that. And that over time, what we're trying to do is not just sort of have a magic number that we just kind of, stop and we live off, but understand that, we're constantly creating wealth. And that even if we stop actively doing things, the fact that we own these, significant assets, they're going to throw off income at some point. And so that it creates, that becomes more a matter of how much means can I create rather than constricting your means, right?
Right.
And so, when you buy things, you invest in things, you're not spending, you're truly investing to the extent that you've increased your means. People talk about living within your means, or living under your means or beyond your means. I'm not saying live over your means. But the thing is, instead of just focusing on within your means, really try to expand your means.
Right. Yeah.
And then live within it. And I think that's what you can't do if you're just living by this concept of a magic number.
Yeah. Yeah, that's fascinating. Really interesting perspective on the traditional sort of retirement, or actually any goal investment planning, which starts with the ceiling, where you just kind of put this thing away and you start to drain from it. It's scarcity, essentially. That's the definition.
Totally scarcity, right?
Yeah.
And by definition.
Right.
You live long enough, you're going to run out and you'd be broke.
Right. Well, I started my career as an actuary early on in the pension and retirement space.
Yeah, there you go.
So I totally get this. It is, when you say depressing, it is. You look at the percentages as the tables run out, it's really depressing.
Oh, what's even scarier about that, I'll tell you, is that if you look at that number, the 4% rule and all that, they were based off of numbers that were calculated between 1926 and 1976. And as you know, one major variable has changed, now compared to those decades, in which is our interest rates are near zero. And
right.
these portfolios that were studied during that period of time, they had interest rates that were pretty healthy. And if you look at retirement income and fixed income, they're really based on interest rates. So there are multiple flaws in the system. And I really worry that, probably our generation of individuals, when it comes to their later years, they're going to be totally screwed. So
yeah, I think you're right about that. Real quick, I want to, as a practical matter, you run a successful investment management firm. You have hundreds of millions of dollars under asset management. As people are looking to bring somebody in to help them with this, to help them manage their money, to help them grow this, what things should they be looking for in someone who's managing assets? I know you talked about sort of the traditional, avoid the sort of traditional approach, or making sure that all of the incentives are understood. But what should people be looking for?
Well, the tricky thing with the way, I do things, and the way I think, that I don't really have a firm per se. I just happen to be a guy who, sponsors and puts together a lot of real estate deals, right? With professional operations in place. So I think what you've got to do first and foremost, in my opinion, is you've got to get exposed to all sorts of different kinds of investing out there, and understand there's something outside of the stocks, bonds, and mutual funds world. And then and then beyond that, you really have to make an effort to independently try to learn about, different people's perspectives on different things. I mean, it's not just about investing and growing money, but it's also about, perspectives that people have on, things like life insurance, or, asset protection, or estate planning, or, And a big thesis that we have within our investing group is the idea that, no investment should be made without looking at its tax consequences. So we look at not only how much it makes us, but how much it saves us, right? So I think you have to form a philosophy first and foremost,
Mm.
and in there's a little bit of work up front.
Yeah.
No, it's a little bit of work up front. I think that it's really, really difficult. I mean, if you want to do something different, do it with zero, no effort at all. I think that's tough, but I think you owe it to yourself to at least try to learn something. Now, once you say, okay, you know what, I buy into this, I'll tell you in terms of, people who are on in our, accredited investor groups and that sort of thing, they come into it. They've decided, I've bought into this idea that I need to add, this portion or that portion, or maybe all, most of what I do is going to become real estate. I'm not interested in being a landlord. How can I get all the advantages, but not? Then you can start looking at, different groups that can provide you the essentially deal flow and things like that. But I think before that, though, you really have to kind of understand what the options are in the first place, because then if you blindly start looking for people without even understanding what your own personal investment philosophy might look like, I don't think it does you any good. Then you're just going to end up, you'll end up back in the same place.
Yeah, that's a really good point. I do think a lot of people try to find someone as a way of borrowing their investment philosophy, and if it's not going to align in the end, then pretty much nothing that's going to happen is going to be a good idea. So that's really great advice. Do the work.
One thing I would say too is that, like, and I know this sounds kind of snarky, but it's a philosophy that I have that I don't take. It's that don't take investment advice from people you make more money than.
Yeah.
I mean, it sounds snarky, right?
Sure.
Seriously, you've got these, super successful entrepreneurs, and, into your, your financial advisor's office, and you make, 5 times as much as your financial advisor. Why do you trust them? Seriously,
right.
Seriously, like, it's insane to me, but that's what we see all the time now. So if you're smart enough, if you trust that you're smart enough, you can educate yourself. I mean, listen, I'm a surgeon, but I'm curious.
Yeah.
That's the only difference. I have no MBA. I have no accounting degree. I have I have nothing. It's a lot of common sense. So,
yeah. Well, you don't get to neurosurgeon without having, the ability to put a couple of numbers together.
I can take a test for sure. But, I'll tell you, there's a lot of, the whole saying, it's not brain surgery. It's like, it's not rocket science.
Right.
The bottom line is that in any situation, neurosurgeons, all sorts of other kinds of surgeons and rocket science or whatever, it's you're not gonna, you don't naturally know this stuff, and personal finance is a lot of common sense, a lot of street smarts. It's perfect for entrepreneurs. They just have to embrace it, not run from it.
Yeah, no, that's great. I love that. So again, if in order to try to put your own personal philosophy together, the Wealth Formula podcast, place to go potentially for some of that information. So. Buck, thanks so much for being with us. Really appreciate you taking the time today.
Yeah, thanks for having me.
Yeah. One last question before we let you go. If people are trying to connect with you, want to learn more about what you're doing, what's a great place for them to go?
Yeah, I think Wealth Formula Podcast would be, the place to be, iTunes and, the usual place. And obviously there's, it's wealthformula.com is a website. If you want to sign up for a list or something and find out what we're doing,
great.
Do that as well.
Excellent. We got that link, those links here below the video on the show notes page. So if you're out and about listening, come on back to the show notes page and click on through to connect and learn more about what Buck is up to. Thanks so much again for being with us. Appreciate it.
Got it, Frank.
And thank you for being with us on the 6 to 7 Figure Show. I've been your host, Frank Bria. Just a quick reminder about the free high-ticket program, Core Offer Black Book. Contains more than 60 pages of standard operating procedures on how to run your coaching, consulting, or expert-based service business. You can download those for free at the show's homepage, 6to7.show. That's 6to7.show for your free Black Book. We'll see you on the next episode of the 6 to 7 Figure Show. Bye.